Good morning, traders. It is Tuesday, the 21st of June 2016. It's 8:01 a.m. Chicago time. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The news, the most important news that came in yesterday actually occurred right near the close of the session. The latest poll from the Telegraph showed that the Remain poll camp has jumped out with a 7-point lead over the Leave camp on the Brexit situation, 53 to 46%. Overnight, or just after that, we got at about 4:02 p.m. Central Time, 5:02 Eastern, we got poll results from YouGov Times that said 42% to remain, 44% to leave. Now, these polls are obviously like presidential polls. It just depends how the poll's taken and so on. But overall, this is what we should expect through Friday with Thursday's vote. I think this introduces a lot of volatility, and it definitely affects the currencies. As you may have noticed, if you do trade futures, actually, you've probably received notices from your clearing firm stating that margins are going to 200% in some cases, and potentially trade is prohibited on some products on some clearing firms. So it's definitely a serious thing that we're coming into. It's a historic event. In addition to that, we have Janet Yellen attending the Humphrey Hawkins testimony today. It begins at 2 Eastern, 1 Central. This is a 2-day testimony. It starts with the Senate Banking Committee and it moves to the House. Generally, the effects of this testimony by the head of the Fed do percolate into the market and create volatility for us today, and that's expected. Yellen's expected to discuss the U.S. labor market, inflation, and the impact of Brexit, among other things. Again, that testimony continues in the House Finance Services Committee. If you've ever watched this is a clown and pony show. Once it gets into the House, most of the substance of what Yellen is going to say is going to happen today in the Senate. George Soros came out and said that we should expect that Brexit would cause a 15 to 20% drop in the British pound against the US dollar and other currencies. For those of you trading the pound, you probably should sit up and pay attention. The German zoo survey came out today, fairly strong at 19.2 in June. May's number was 6.4. The improvement of economic sentiment indicates that the financial market experts have confidence in the resilience of the German economy, and that's really what's driving us. What was driving us overnight. Looking at the calendar, we are all clear in the U.S. markets. Nothing there except for we have Draghi speaking currently at the European Parliament in Brussels, and we have again Yellen. Actually, it shows it in one of my calendars here. It shows it at 10 Eastern, 9 Central. I don't think that's correct. I'm not sure. I have a conflict between calendars here. But that's how things are shaping up. Let's take a look at what was expected yesterday, just to review as we always do. Here we go. So this was yesterday's Trader Bite. We expected to open in a gap around the 85 area. The key figure below, as discussed in yesterday's Trader Bite, was 73.25. The expectation yesterday was for us to open, test higher, The overnight session, if you recall, you may want to watch that Trader Bite again. The overnight session, the overnight profile looked like this. It was a kind of a shelf at the overnight high down here, and then it tapered off on the bottom. And what I said is that it is extremely likely to take out that high, the overnight high. Look for sellers look for sellers, and then look for rotation down, and the expected rotation was down into the 79.50 area. Once the market opened, the rotation down was expected to be the gap mid from 68 quarter to about 85.50, which put us at about 76. That was the target after the open, 76. So overall, this is what we got. The primary hypothesis worked out. We did push up high, rotated down. We pushed all the way down to around 71 or something. The secondary hypothesis is open auction, out of range, drop, chop around, find buyers, not close the gap, and then start to move up towards the gap above at with a target of the mid 95.50. 95.50. I guess my mic is really loud. Let's fix that. There we go. That should be a lot better. Apologize for that. Not sure why it changed. So that was Hypo 2. Hypo 2 did not work out yesterday. Let's look at what actually worked. Here's what Hypo 1 looked like in real life. There it is. The overnight high got pushed. In yesterday's trading. The overnight high was in this area right here. It got pushed in early trading. We have a clean taper at the top, and then the market started walking itself down. The key element here is the breach of the mid and push into the opening swing. Once we push into the opening swing, the expectation is to touch the opening swing low, which it did. We had one opportunity on the pullback to catch the move lower, down into the 73 quarter. Again, it got to 71 and a quarter. The initial target was 76 quarter, which was the gap zone mid that was put in yesterday. Here's 87. Talked about this in the chat room yesterday. 87 short, leaning against mid and against the prior zipper in this area right here. This provides your resistance and backup in case it does not hold. You have some liquidity here or some volume here to lean against, and then it starts to rotate down, and then it finally pushes lower. And then right after the close, we got that poll information that led to a quick run up. So that was yesterday. That was Hypo 1 that was on target. Again, it's not like the goal is not to be for it to be exactly right, but it does tell us how the market is auctioning. Here's the response to that poll: an immediate pop up to 83 and a quarter, and then the market settles back down and then starts to drift up in the overnight session, in the Asian session, and through Europe. And then just now we have a small pullback. The ZOO figure came in around here, didn't have very much of an effect on the ES, but overall the ES is in a completely Gaussian, completely balanced overnight session with 250,000 contracts traded. The normal volume, or the most common volume for the overnight session, is 180,000 on the nose. We have 250,000. There's a fairly active overnight session, but remaining in balance. The market pulled back to about the mid of yesterday's trading and has basically held its value below yesterday's value. We're not able to get back in there. It's likely to continue to fight in the gap zone that was created yesterday. On a day-to-day basis, just a quick look at the profile, just so we can see our bearings. You can see here what we've done overall. We've shifted down. We've been one time framing down until last week's last Tuesday, and then we broke that, and then we continued one-time framing down. This is a classic impulse pullback continuation, consolidation, correction. The expectation is a small pullback down and then continuation higher back to test the highs. That is the normal, and I emphasize the normal part of it. That is the normal habit here. But of course, the issue is, as you know, Brexit coming in on Thursday, which would throw a wrench in things and potentially cause that to change, expecting wide ranges on Thursday's trading. And expecting it to go all day long from 7 a.m. till about 10 p.m. UK time. So it's the auction, if it remains the way it normally tracks, we would expect a small pullback. We're looking for a pullback to close the gap zone, and then look for a base, and then push through to 2100, and then from there chop 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 up to new highs. That's how things look as they stand right now. As far as what we're expecting for today, today is expected to be an inside day. We had about 20 points of range yesterday. The expectation is this morning an open auction in range, looking for responsive or a push away from value early, expecting it to base, and then looking for a push towards value, and then looking for it to sit in the middle. Most of the volatility is likely to come from the Humphrey Hawkins testimony by Janet Yellen. That's your primary hypothesis. I'm looking for a balancing day inside of yesterday's range. The opposite plan would be, or plan 2 would be essentially the same thing: open auction in range, test, be responsive early, take out the overnight high, and then chop around and end up in the middle also. So that's what I'm looking for today on Hypo 2. Today I'm not looking to catch any trends. I'm not looking to trade from the inside out, meaning trading from consolidation into imbalance much. I'm looking for to test. Intermediate term OTF is expected to be active. And overall, I expect to remain in yesterday's range. Be nice if it broke and started filling in the gap zone below. For those who use flex levels, this gap zone will show up in the next 5 minutes. So that's how things are shaping up right now. Overall, there's a lot to contend with here this week. Between the Yellen's testimony, Brexit, and so on. I intend to trade the entire overnight session on Thursday, so I'll be in the office at midnight Chicago time, and I intend to trade it until the European close. I want to remind you, actually, there will not be a public AMA on Thursday. I was mistaken there. I do have a pre-scheduled webinar with Futures IO, formerly Big Mike Trading, at 3:30. It is the second part of the series of 4 webinars I'm doing. This one is going to be on trading mindset. The link for it will be on Twitter and on my website. I invite you to join it. The recording will be made available for that. Thanks for listening in. Good luck, and I'll catch you tomorrow. Take care.